Hey, what is going on? It is John here. I'm going to be talking about investments today. I've been watching some videos lately, and I got to say, I watched this new channel, Millennial Money. I'm not sure if y'all know who that is, but that is Meet Kevin. It is Graham Stephan. It is Andre Jick, and somebody that I didn't really know. I had heard of him. His name is Jeremy from Financial Education. And I started watching some of his videos, and I'm like, I'm on the same page with this guy. Everybody else kind of talks. They really have their own different, ways that they talk about stocks. And I've been following Meet Kevin the most, right, over the last several months, probably since the summer. And it's it's uh, it's been really fun to watch Kevin, but it gets a little hard to follow him because now his videos are like live streams that are 2 hours long, and very rarely do I see a video less than 30 minutes, which is fine. It's just hard to kind of see the stocks that he's picking. And now he looks like he's more of a trader than an investor. And I myself, much more of an investor. I kind of, a lot of people have done pretty well, right, since 2009 because it's been a bull run. But I had came up with a formula, right, that I've done well with respect to Netflix and buying their shares back in 2011 and 2012. And I'm going to break apart that formula a little bit right now, and then a little bit later. But basically, anyway, so I take that formula, and there's a lot of other stocks that I bought, around the time that I bought Netflix, that did super well when I established this formula. Some of them I should have held on to, and I didn't, like Microsoft. Anyway, I do have like a little bit of Microsoft now, but I really should have held on to it back then in 2012. But after watching some of these videos with Jeremy from Financial Education, I'm really enjoying the way that he breaks stuff down. Back in the day, I mean, that's what Warren Buffett did. Warren Buffett, really looking at the financials. My understanding with respect to Warren Buffett, before Charlie Munger, I mean, was really aggressive in finding opportunities in stocks where, he wanted to get average companies at amazing prices. And after Charlie Munger came into the mix, they wanted to start going after more investments, and they started going after, again, this is my understanding, amazing companies at average prices. So he was able to convince Warren to not be so picky with respect to the price. But the reason I say that is because I do believe that you really have to tear into the financials. And I'm not saying that the financials are everything. I'm not saying that at all. I'm just saying they're very important. I've done a lot of videos with Bitcoin. I really enjoy watching Bitcoin and different, billionaires talk about Bitcoin. I don't have any direct exposure to Bitcoin. I do have some exposure, though. I'm investing in ARK funds, ARK ETFs. That have GBTC in there, and I also have some GBTC, which is the Grayscale Bitcoin Trust, which is like a trust account that has that has Bitcoin, right? So what we're going to do is I found a video of Jeremy's. We're going to go through a couple of his points where he kind of breaks down, really what he's looking for with respect to, finding an investment that's going to 10x, right? And it's not necessarily any investment in particular, although he does at the end talk about one, and I really like it. I do have contextual experience with it. I use it, and I went ahead and I broke down their financials for you as well. So without further ado, let's go in. So before we go in, just to give you a little heads up in terms of, what I do. I also have another video I did recently where, I say, invest in stocks like a pro, and I kind of break down my, really just the way that I analyze, these companies, these stocks when I invest in them. But basically, I look at a couple things. Number one, one of the most important things I look at is what the gross profit margin number is, right? For example, Facebook has got 80% plus. I mean, it's pretty rare to find a business with 80% gross profit margin. Number two, I take a look at what their gross profit number is, what that figure is. I divide it into the market cap, and then I create a number in that ratio. Then what I'm doing is I'm stacking up all the investments I want to invest in, and I establish really what that figure is on the peer group, so I can see kind of what their relative valuation is. And then also I look at year-over-year revenue growth. That's a really big one. I don't really necessarily have a specific number. Obviously I want it to be the higher the better, right? To give you an example, Etsy came out with their numbers, their earnings release recently in mid to end of February, and they're the highest in the group, at 100%, and they're still pretty attractive. And they're actually probably one of my favorite stocks for this year and the next, even 5 to 10 years, right? But basically, yeah. So they were the highest in the group with 100% plus year-over-year revenue growth. And then even Snap recently. Snap is one of my favorites too. Basically reported just in a press release, just that they're foreseeing many years of 50% year-over-year revenue growth. So everybody, I don't have that specific number. Obviously, the higher the better. I really like to see something bigger than like an Amazon, like Amazon and Apple, or well, I don't know about Apple right this second, but Amazon's, at about 20%. It's been about 20% year-over-year revenue growth for kind of a long time. So obviously, if it's a smaller company, you don't want it to be bigger, right? Another thing I look at is I try to find, if I can, I try to find a company that is about to or has recently surpassed $1 billion in annual revenue, in annual revenues, right? And the reality is because that could be a good time to get in, and once they surpass that million, I'm sorry, that billion, then they start growing as a company. Then they'll get picked up by Wall Street, and you can ride out the beauty of those institutional orders where the institutions will come and start picking them up, and then that stock can surge. For example, just to give you an example with respect to Netflix, I broke apart that analysis back in 2012, and if you took a look at full year 2011. Their revenues were $3 billion and their market cap was $3 billion. So I've ridden that Netflix out from $3 billion in 2011 to all the way full year 2020. They're at $20 billion, and they're projecting to be $25 billion in the in the end of for the full year 2021. So that's really what I'm going for. That whole if I could get them before 3 billion, that's great. If they're a little bit over 3 billion, that's fine too. But basically that whole idea of going from 1 billion in sales all the way up to 10 billion plus, if I can get them. It's kind of hard to do it all. But anyway, so let's hop into some of Jeremy's points here, and we'll take a look.
So, what am I looking for in a 10x opportunity, and how do I identify that in kind of my thoughts around this? Okay, so first thing I'm kind of looking for is I'm looking for a company that's a disruptor, a disruptive company in an industry. Okay.
This one's kind of obvious. Obviously, it's going to be.
So, for instance, a perfect example of a stock that's obviously worked out in the past 24 months that is 10x or more is Tesla. So, Tesla, super disruptive company on so many different fronts. The way they do business, the way they raise capital, their CEO, all these things are very disruptive from the traditional way of doing things, right? But it's not just that. They're completely disrupting the entire automobile sector, right? Taking the whole entire industry from an industry that is like ICE vehicles and internal combustion engines, and that's like how it's done, right? To now every single big auto company in the entire world is basically saying, yeah, within 10 years, we're going to try to make all our cars electric cars. That's crazy. Does it get more disruptive than that? That's absolutely extraordinary. An industry that hadn't had much change in forever, all of a sudden this company comes in and changes the entire industry. And now every company out there wants to be an electric vehicle maker. And that's the way. That's truly disruptive. And not just that, right? Then they're disrupting how these cars are driven, right? Because they want to basically make it so the car drives itself and you don't even have to drive the car. And it can do a much better job than like a human can do in those sorts of things, right? So when you think about that, that's completely disruptive. And when it comes to a company like Tesla, a disruptor, they're going to continue to disrupt more industries in the future. A lot of people are looking at what they're doing in solar and as far as batteries in your garage and things like that, as well as potentially maybe HVAC and so many different applications and industries that company can go after long term. It's absolutely astonishing, okay? So I'm looking for a company that's very disruptive. Upwork, obviously, a very disruptive company in the overall work.
Upwork is actually the one that I like quite a bit that he's going to highlight. And I went in and I did their financials, so we're going to take a look at it.
Workspace, when we think about the freelancing economy, that is something that's just going to get massively bigger in the coming years. And they're a company that's very well positioned to disrupt in that industry, right? The Planet, the way they do business is very disruptive compared to a lot of players and how they were thinking about their businesses. They're opening superstores that are massive, that are like, Disneyland of Jack Jackson, right? Very disruptive and very different business model than a lot of places. And also they focus on branded products at a time when a lot of these other Jack Jackson plays just want to flood the market with cheap product. And who cares, if it has a brand or anything like that. They've really focused around branding of their products. Very good food company, obviously plant-based foods, which is a whole disruptive change that is massive in the food industry. It's going to continue to play out over the coming years. Tattooed Chef, same exact thing, really disrupting plant-based foods in the freezer aisle specifically. So when I look at all these type of stocks, they really have to be massive disruptors in an industry, and also they have to have huge total addressable market
TAM,
opportunity.
total addressable
now,
market.
How do I judge?
That's also kind of
huge
obvious
TAM, total
to me
addressable
as well.
market? Well, I'm looking at the industry in general, and I'm trying to see how big is that industry. Okay, so something like a Tesla, right? I mean, when you're talking about going after the entire automobile industry, that's like crazy huge opportunity, right? And you're talking about you're going to be potentially the number one player by far and away in that industry.
Okay, I'm gonna make a guess, and I'm gonna assume that that you all know what total addressable market is. I mean, basically, it's pretty obvious. It's total addressable market, right? I'm going to certainly talk about some of the stocks that I love for for this year and for the next 3 years, for the next 5 years, and then even longer, right? I'm going to talk about the next Netflix pick of mine, right, that I like. I mean, I'm really going to just talk about two that I know off the top of it, without having to think, without having to look, that I just really love right now. I'm going to talk about those a little bit later. And that does not include Upwork, which I went in and did the financials for you. But what I'm going to do is I'll say, look, obviously, total addressable market. You take a look at Netflix. I mean, the total addressable market is huge. It's really anybody with an internet connection, right, and a computer or, a smart TV. So it's obviously, a huge total addressable market. But what I'm going to do is I'm going to go into this next section where he talks about revenue growth, because revenue growth is really super important, to me. I kind of feel like he has the bar a little bit low with respect to revenue growth, but I'm going to go ahead and show you what he has to say, and I'm going to take you into my most recent financial spreadsheet so you can kind of see just how some of these companies are looking with their year-over-year revenue growth, and show you how kind of Etsy looks compared to the others, okay?
These sorts of companies, the 10x opportunities, I have to be very confident that these companies can grow at least 10% plus per year top line for the next decade, okay? And so when you talk about
plus,
those type of rates
that's kind of a
compounded,
low
it's pretty
bar.
impressive numbers. When I looked at Tesla, I was like,
in my opinion,
yeah, no question, okay? It's not even a question if Tesla's going to grow 10% per year for the next 10 years, okay? I started investing in that 2018. I looked out to 2028, and I'm like, yeah, they're going to grow a lot faster than that. So that's not even a question, right? Upwork, same exact situation. The Planet, they should destroy those growth rates over the next 10 years per year, okay? Very good food company. Oh, my gosh, okay? They're growing revenues like 322% in the past quarter. I mean, the amount of growth for that company long term. The Tattooed Chef, okay?
Okay, so now he's talking about restaurant stocks, which I'm not gonna mess with restaurants. But anyway, so here's my little spreadsheet. You guys, if you've ever seen a video of mine, I mean, I use this quite a bit. But basically, yeah. So anyway, so if you take a look, one of my this last column here is year-over-year revenue growth. So you take a look. One of the stocks, actually, I did a video. I can put it in the information bar above, and I did these stocks that Jeremy likes. 3 of them that I like that he likes, and one of them was Shopify. Very impressive year-over-year revenue growth. I mean, all these companies have pretty much at this point already reported their full year 2020 financials. I like to look at full year. I like to understand what's going on quarter by quarter, but really what's important is understanding full year or trailing 12 months, right? Because a lot of times companies will have their fiscal year end in like September or June or something, which kind of makes it a little bit challenging to do these numbers. But basically, 85% right there for Shopify. And take a look at Etsy right there, 107.82% right there for Etsy. Recently just surpassed their 1 billion in sales. The year before was just a tad over $1 billion. So I guess maybe 2019 was when they hit $1 billion. And then they've got just a very where is it? Let's find out. There's Etsy. Okay, cool. There's the gross profit margin at just a nice and pretty 70%, 70.6%. Love to see those high margins just like that, right? And then, a very nice 27 billion market cap. Now, Etsy's probably a little different because today is Thursday. It's March 11th. And the market's just been crazy. Tons of red days the last 3 weeks. And just incredible super green day today because last night, Wednesday during the day, I'm sorry, not last night, but Wednesday during the day, the Congress completely passed the $1.9 trillion stimulus. So the market's just on fire today. Gosh, look at Airbnb. Jeez. Anyway, so if you take a look at Etsy, their market cap now is still 27.84. So that's still pretty attractive for Etsy's just Etsy's one of those where I just don't even have to think about it. I just know that that's going to be a stock I really want to take more positions in this year, for the next year, for the next 5 years, for longer, right? There's just too many good things going on with it. The only difference with Etsy that I don't have with other investments I really like, I don't have that contextual experience. I really, I have a lot of contextual experience with internet marketing and everything related to it, but I just don't have as much contextual experience with using Etsy and buying or being a customer or anything. But basically, anyway, so that's year-over-year revenue growth, right? Some other ones are the second one that I love. I just don't even have to think about it. I just love Roku. Absolutely, just positively love Roku. We're looking at about a 57.62% year-over-year revenue growth, and solid number. If you can do better than 50%, it's great. And then they also recently surpassed 1.7 million in 1.7 billion, I'm sorry, in actual sales, and it looks like full year 2019 was when they had when they just barely surpassed 1 billion in sales as well. They are a little bit pricey though. Like as you can see right there, this is the gross profit into market cap at 65, so it's a little bit high on the list. You take a look at Etsy, that's 23. So Roku has had certainly a pretty nice tear. So I gotta anyway you cut it. Like I'm committed. I'm into Roku. I think they're going to. My feeling is I think it's a lot more likely than not that they're going to get to 100 billion market cap. But outside of that, they're a company that I see them as they're gonna they have the ability to do what Netflix did, which is come in and they controlled the distribution first and then they did the content. And there's no reason that Roku can't do that, because everything that they're doing with respect to selling their hardware, they're basically an operating system for a TV. They've got music now. They got those wireless speakers. They've got a phenomenal advertising model. They've just got too much going on for them. If you figure they're right now at 1.7 billion, Netflix is going to be 25 billion. They've got Roku's got a long way to go to start to kind of stack up against Netflix in terms of their revenue that they have from their model. So that is the concept of year-over-year revenue growth. The last one I'm going to talk about is Snapchat, actually. So Snapchat, where's Snapchat? Okay, here. So Snapchat recently reported that they foresee many years of 50% plus year-over-year revenue growth. Snapchat's now over 100 billion in market cap and just over 2.5 billion in annual sales. And it looks like, I think, it looks like their 2019 full year, they had about 1.7 billion. So they've also kind of recently, surpassed that 1 billion level. All right, so let's go ahead and we're going to go to just the end of his little clip here, where he talks about, he's going to talk about the bottom line, and I'm going to add my comments on the bottom line too. Okay.
Did years ago. Okay. When I look at all these companies, Upwork, oh my gosh, that's. And these sorts of numbers are for very, very special companies. Let's just put it that way, okay? There aren't a ton of companies out there that can basically have 25% to 30% of their revenue hit that bottom line. Those companies are special. I feel like Upwork has a great opportunity, okay? I feel like the Planet, when you're talking about their own.
So he talks about the importance of the bottom line. 25, I mean, that's a big number, 25, 30% to have the bottom line. I really don't focus on the bottom line, because what I'm doing is I'm focusing on companies where they have recently or are about to hit 1 billion in sales. And a lot of times I feel like it's for me at least, it's more important to understand that gross profit, because there's so many numbers in between the gross profit and the bottom line that company is going to have to there's a lot going on there, right? And those in between those two figures is really, in my view, what makes a business agile in terms of, tough times or whatever. That's why a high gross margin business is the best business. That's the business I want to be in. I want to be investing in businesses with a high gross margin. And the fact is a lot of these growth companies, they don't have a bottom line yet, right? They're losing money, so they're reinvesting money into growing, or they have really high revenue, year-over-year revenue growth. So it's not that likely that you're going to see a company with recently $1 billion in sales. It's just not that likely that you're going to see them with earnings. So yep, earnings is great, EBITDA is great, but the reality is if you start investing in when they have that, you've missed a little bit of that boat, right? I'm not, obviously go for earnings if you like earnings. I'm just saying, in my view, I try to get them before they actually have earnings, but have good gross profit levels. So let's take a look at the last one here, which is Upwork on my little spreadsheet. We'll take a look. I broke down the financials for you, and they are pretty small, so it might be a good opportunity here. So we're looking at market cap at about $6 billion. They've got most recent 12-month revenues at about 373 million, not even $1 billion yet. So they're way before $1 billion. We're looking at a 72% gross profit margin percentage. Fantastic. Their most recent gross profit was just under 300 million. And then their year-over-year revenue growth is about 24%. That's a little bit of a lower year-over-year revenue growth than I'd like to see from a company like that, but whatever, it is what it is. But still fairly relatively attractive on the valuation at a 22, with the gross profits divided into the market cap at 6. So, and again, the most, obviously I look at the financials. Financials aren't the most important thing. I just really have to break them down to see what they are. It also is really important to have contextual experience, with this investment. I do, because I actually have been using Upwork for my internet marketing business. And I found this, really talented people on there. I also use Fiverr as well, but kind of find there's a difference in terms of the level of developers and programmers that are on Upwork compared to Fiverr, right? So there you go. I'm going to be watching Upwork. And those are the two stocks that I'm looking at. I don't even have to think about that I'm into for this year, for the next 2 years, 5 years, and then even more than that. And if I'm going to put my money on anything to go 10x, it's going to be Roku and Etsy. And there's even more. There's a lot more, but this is really about kind of identifying some of those components that other people like to look at. Hopefully you liked it. Hey everybody, I came out with a blueprint. I cover investing. I cover online income. I also have generated revenue on the internet for years as an internet marketer. For over 10 years, I got 20 million plus in career revenue that I've generated, and I also cover credit, business credit, financial independence. And I've got a guide at the end, it's literally a 15-page guide of all the groups in the U.S. that offer a free credit score, and all the groups that offer a free FICO score, and the corresponding bureau with that FICO, so you never have to pay for a FICO again. And everybody, it's only $7. I'm going to put that link below. Or if you have any questions about any of those things, online income, investing, credit, whatever, just email me. Put a comment down there. Hit it with a like if you like some of this value. And have a great week. Thank you.